So we will have a lot of volatility. And as I said, my view is you're not going to make money out of asset markets. I mean, not meaningful money. But I think gold and silver and platinum and also other commodities, the food commodities have started to wake up. I think we'll keep that purchasing power. And my view is that the asset markets in general are peaking out in the United States, and other asset markets, especially in Europe and in emerging economies, or in America, some sectors are depressed relative to the commodity. Oil stocks are cheap, or the mining stocks are low. So some sectors are bottoming out and some sectors are peaking out. And as an investor, we need to focus on what will go up and what is not recognized, what is neglected, what nobody wants. That is what I'm looking for. I'm referring to the Magnificent Seven stocks, the FANG stocks, semiconductors, all this AI investment craze. Yes. These stocks are peaking out. I wrote a report, the Trump top. The report was written in December. Look, the whole world is gambling on NVIDIA and the cryptos and the Tesla stock and so forth. A bubble is always attracting capital from everywhere. Every bubble we had, you know, even in the tulip mania in Holland in the 17th century, in the 18th century, it attracted capital from all over Europe. Because the people today are well informed through social media and internet. I know as much as you do about NVIDIA and its stock price right now. I happen to have Bloomberg Traveler, but other people, they have other services like Yahoo Finance and so on, and Interactive Brokers and so on. So they know the codes and they trade these stocks at the commodities or Bitcoins 24 hours a day. I mean, I never was, you know, a big conspiracy theorist, but some of my friends who are very well informed, they have argued for the last 20 years that London doesn't have the gold it claims to have, you know, and that there is a shortage, as well as for silver, and most likely for platinum as well. And we know that in the last 20, 30 years, the financial markets have grown like this exponentially. The global economy has grown like this. So the financial markets are much bigger than the global economy nowadays. We can measure that by measuring the market capitalization as a percent of GDP. So when I started to work in 1970, the US stock market capitalization as a percentage of GDP was 25%. Now it's close to 200%. When it was 25%, when the stock market went down or up, it had no impact on the economy.
Right.
It had a little impact, but not a huge impact. Now, in my view, if the markets go down, they'll have a huge impact on the economy. Huge. But that, in my view, will motivate the Trump team, who are all rich people, not all, but most, to support the stock market. They will print money, but then the currency will go. it's clear to me that selected US assets are very highly priced, and the expectations for these companies are very high. And when expectations are very high and the stock price is very pricey, there is plenty of disappointments that can creep up. And so I would avoid the Magnificent Seven stocks and the semiconductors and anything that is popular. And I would look at sectors and industries that are not popular and depressed and have a value character, low price book, low price to sales, and so forth. That is what I would do. And that you find in emerging economies. Last year, one of the best performing markets in the world, the best performing country ETF was Argentina. Mm-hmm. 2 years ago, nobody wanted to look at it. 2024, one of the best, 2023, one of the best performing markets was Turkey. Nobody wanted to look at it beforehand. So these are the things I look at. I think Latin American markets are reasonably cheap, and some Asian markets are inexpensive. They're not as cheap as they were in 2003 and 2009 during the crises, but they are relatively cheap. Basically, my view is that Wall Street doesn't want to, and the public doesn't understand really what inflation means and what it is. Mm. And in my view, there are two major categories of inflation, or the symptoms of inflation. Inflation is an increase in the quantity of money and of fiscal deficits and so forth. But the principal symptoms are either you have very high consumer price inflation. In other words, the price in your supermarket goes up, mm-hmm. or the price of services go up. Like if you want to take a train or you pay for a taxi, the prices of these things go up a lot. Or insurance premiums is a typical consumer price inflation symptoms. Right. Or we have other categories like asset inflation. When stocks go up, properties go up, and commodities go up, or house prices go up, and so forth. So these two major categories we have to treat differently. And this is one of the viciousness of inflation, that in the system, when you print money, the money doesn't flow evenly to everybody. Mm-hmm. It flows unevenly to the banking sector first, and from the banking and insurance sector, it flows on into other sectors of the economy. The problem with Mr. Trump is he's an arrogant, no knowledge person. He takes decisions without having thinking through the process of the consequences of his decisions very carefully. He's very impulsive and he changes his mind, and he's an interventionist. Mm. Sadly, he thinks he knows everything better than anyone. So the tariffs, by and large, are a horrible idea. Horrible idea. The tariff is a tax, and it's an unfair tax. The economists in the 19th century already discovered that it's an unfair tax. So they removed the tariffs in England, which were the Navigation Acts and the Corn Laws, and thousands of import duties on everything. You have to be very, very careful how to handle it. Mm. Because if you impose, say, a sales tax on someone, he may not be the one who pays for it. And correct. The tariff, the tax will be on the lower classes in America. That I guarantee you. Everything will become more expensive as a result of tariffs. Now, he may not introduce them because soon he will notice that America may need China more than China needs America. What Mr. Trump doesn't know or forgets, at least half of exports from China to America are actually American companies that make goods in China. So, I mean, if General Motors produces auto parts or imports auto parts, and there are tariffs on these auto parts, then of course the car in America will become more expensive. Do you want that? Don't tell me the US is growing rapidly, because if the debt grows by, say, I don't know, $10 trillion in 8 years under Biden, and the economy is growing only at, say, by 3 trillion, where is the growth?